Pretty crazy day for investors today. I mean, the tech market, we can see the Qs is down roughly 4.8% as I am recording the episode. Dow is down roughly 3.3% and the S&P 500 is down roughly 3.7%. The main reason is today on Tuesday, September 13th, the August inflation report came in hotter than expected. With inflation coming hotter than expected, it does kind of create a fear to investors that the Fed Reserve is going to be a lot more aggressive in their monetary policy. A more aggressive Federal Reserve is going to mean that, hey, there might be a chance of lower consumer spending in the short-term future.
I do want to thank The Motley Fool for sponsoring this video, and make sure to check out fool.com/Jose to get the top 10 stocks to buy right now.
So obviously the ones that are going to be taking the biggest risk right now are either growth companies or any kind of company that deals with kind of consumer demand. Obviously the tech market is one that deals with a lot of that, especially products that aren't a necessity, especially when you need to upgrade, right? You do need a cell phone, but you don't need to upgrade every cell phone every single generation, especially if you need to save money. Many people need a computer, but you don't need to upgrade to the next generation of process, to the next generation of graphics cards. So we can see some of these tech companies are taking it. If we can see Nvidia, one of my favorite semiconductor stocks right now, is down roughly 8.2%, sitting at $133, very close to that 52-week low. We also take a closer look at AMD, sitting at $78, down roughly 7.9%. Have Intel sitting at $29.71, super close to that 52-week low of $29.68. We actually might break that a bit, and we even see Micron Technology, another semiconductor giant, down roughly 7% and sitting very close to its 52-week low. So again, I mentioned why these tech companies are taking quite a hit. All of them deal one way or another with the consumer space. Obviously Nvidia with its gaming products. We also have AMD that has the client revenue, which is their processor sales. They also have their gaming revenue, which does play a good portion of total revenue. So we can see why investors might be a bit worried. Intel obviously having a lot of consumer-based products from laptops, desktops, and that being a good portion of their total revenue is taking a hit. And Micron that provides memory for all types of products like PC, like graphics, like mobile devices, and the list goes on, especially in the consumer space. We can see why these stocks are down. And if you're enjoying the episode so far, make sure to hit the thumbs up as it does help me grow my overall audience. If you want to support a little bit more, make sure to subscribe using my link, fool.com/Jose. Also, if you want to learn more about the semiconductor market, my semiconductor newsletter will be coming pretty soon. The link is down below. So now we have the question, right, with kind of these stock prices and kind of this fear of consumer spending that we have seen for the past year or so, is it a horrible time to invest? And I do want to say this is probably an individual answer, and that's the great thing about investment. There's no perfect answer, and every investor has their own goal. For me, for example, I don't mind investing on a weekly basis. At the same time, I understand the risk that, hey, stock prices can continue to go down. But I like to keep discipline. And one of the ways that helps me be disciplined, especially in this investing, is that on a weekly basis, no matter if stocks are up, no matter if stocks are down, I plan to put money into my account and I plan to buy. There might be other investors who prefer saving a boatload of cash and waiting for the bottom because they believe and they're disciplined enough to know when the bottom is for them, right? Hey, they might feel comfortable not adding right now and they might feel comfortable adding later on. That strategy might work well for others. For me personally, I don't think it's one I want to implement. Another thing is I'm pretty young. I just hit 30, and for me the money I'm putting in these stocks right now and in my portfolio is money I don't expect to see anytime soon. So for me, when I think about the 10-year time span, the 15-year, 20-year time span, or however, I don't believe in the future I'm gonna regret that I purchased a little bit too early to the bottom. And I understand that, right? I do understand that maybe my returns might not be as high as someone else's, but at the end of the day, I do believe that the companies I invest in the long term of things are going to provide me with some great returns that I'm going to be happy that I'm investing right now. So for me, even with stock prices down like this and the market still looking pretty bearish, I have no problems and I'm going to continue to invest. Again, it's different for every single investor, and you just have to find what allows you to sleep at night. And for me, the semiconductor market is not going anywhere anytime soon. With the overall kind of technological advancement, artificial intelligence is not gonna stop because of this. It might be delayed a bit, and investments might delay maybe delayed a few months, a few years or so, but artificial intelligence is definitely going to be a key player in the future. The advancement of processors, the advancement of chips, it's not going to stop. Maybe it might be delayed a little bit, but it's not going to stop. That's why I'm super excited about the semiconductor market and the overall industry. So yes, days like today does suck. Obviously my portfolio is down, but again, this is money I don't need anytime soon. So take care, have a good day, and see you next time.